Hi everyone, welcome back to the Market Chat. I'm your host, Richard Moglen, and joining me again is Ryan Pierpont, who is one of the top performers in the U.S. Investing Championship in both in 2020 and 2021. Outstanding performance, and I'm so excited to have him back on. I really enjoyed our last conversation, and we're just going to kind of add to that. And he's also prepared some slides, some really important things that he feels need to be shared to new traders. So Ryan, first of all, thanks so much for coming back.
Richard, my man, thanks for having me again. Are we in the Overtraders Anonymous meeting? Is this the right spot for that?
Yeah, I'm sure.
Just kidding.
Yeah.
If you don't want to talk about that, we can talk about the Niners for 2 hours straight.
Yep.
So, It was I don't know if for all the football fans out there, is a doozy of a weekend. So I don't know how the Niners won, but I'm glad they did. So.
Absolutely. And overtrading, I'd love to touch on that because that was one of the mistakes I ran into last year. I'm sure a lot of people did as well. But first of all, for people who didn't watch the first interview, we went really exhaustively into your background and kind of how you got started with investing. So we won't go that in depth, but I'd love to just hear kind of, I guess, the crash course version. Ryan, how did you get interested in the markets? And what were some kind of key learning moments for yourself?
Sure. So I was in high school during the dot-com boom. My parents and everybody else, ditch diggers and, school teachers were talking about the stock market. And so that's kind of when I first got wind of it and went into college at Santa Clara. I wanted to do a lot of computer science type stuff. I loved video games and computers at the time and went into that. My first quarter there, I think I was joking that, you're staying up till 2 or 3 a.m. in the morning looking for missing semicolons and all that stuff. And, I was playing baseball. So you have to get up and lift weights 3 hours later. And so I was like, this is not working out. It just never came naturally to me. And so I basically went into the business realm, which kind of fit my schedule a little better. And I mean, I initially wanted to be a professional baseball player coming out of high school. Cause it's one thing when you kind of level up in anything you're doing in life, there's like tiers of difficulty. So like in your high school, kids are throwing like 75 miles an hour. You're just like, oh, it's a piece of cake. Then you get to college, it's a little more difficult. And I remember my first series there, my freshman year, I did really well. And it's like, oh, it's a piece of cake. And then we played Stanford our next series and facing Jeremy Guthrie, who's like in the bigs for 15 years, like just blowing 98-mile-an-hour fastballs with nasty sliders. I was like, all right, I'm pretty sure this is where my journey ends. So I didn't want to have to sit on a charter bus for 8 hours here and there and making minimum wage. And, I wanted to make some money out of college. So went into the business realm, took a bunch of classes and we had some stock classes and just kind of briefly touched on some things. And I didn't really I graduated in 2005 and I didn't really start looking into stocks until 2008, which was perfect. Right. And I just doing penny stocks and it didn't really turn out so well as you can imagine. And so lost maybe a few grand there and kind of put it on the back burner for a couple more years and went, I think around 2010 or 2011, found some option site, kind of tell you how to trade options and did that. Got lucky my first year and then spent the next 4 years getting smoked. So a lesson to everybody. That's when I finally said no more option trading. So I haven't traded an option in years and I'm at peace for that. But so that's kind of when the fire started to burn and found O'Neill's book. Read that a ton of times. It's a great foundation for anybody wanting to learn about the stock market. It's funny, when I first picked it up, I went to the checker and she's like, you all set? I was like, yep. I threw it on the table and she's looking at the title. She's like, how to make money in stocks. And she kind of like rolled her eyes and was like, good luck. And I was like, I'll show you. But anyways, a phenomenal book, obviously. And so that was kind of my first introduction to CanSlim. And from there, I think it was around 2012 or 13. I joined Dan's site at chartpattern.com and those guys really did a phenomenal job of teaching you how to fish. And that's where I learned a bulk of what I know. And so started to kind of dive into that kind of stuff. And for 3 or 4 years, even though I was getting hammered, I was determined to learn all about the technicals and fundamentals, how they play a part into, how stocks move. And finally started turning the corner after those first 4 or 5 years or so. And Just tried to get incrementally better every year. So it's been a long journey. It's been 10 plus years and I love every minute of it. I mean, I've dedicated my life to this. It's so much fun. I know not everybody thinks it's fun, but I thoroughly enjoy the process and going through the routine every day, and just brings me a lot of joy. So.
Perfect. And if you can see the orange blur right behind me, that's How to Make Money in Stocks, which once again, for anybody new to trading, I highly recommend checking it out. It's a great foundation, kind of build off your style for sure. And Ryan, you mentioned Dan Zanger and Randy Opper in a tweet when you announced basically the end of the contest and your performance and that type of thing. I'd love to hear some key lessons you learned from those two that really you think helped you and might help other people watching this.
Yeah, so Dan is great. I think I mentioned it in my first video. Dan is zero fluff. He just kind of straight shooter. I really dug into his process. So I learned, I think, from a technical standpoint, a lot from Dan. Mm-hmm. And then from a process standpoint and following your plan and having rules, that sort of thing, I learned a ton from Randy. Like Randy's an incredible teacher and he's just done a phenomenal job for me in terms of, that's really where I turned the corner, because I learned those first 4 or 5 years on, okay, what's a stock, what's a bull flag, bear flag, all the standard patterns and whatnot, how to read price. But there's more to it than that. It's sure you can identify certain patterns, but how well do you execute? Are you buying crap that isn't even set up? I was doing a lot of that in Q3. I'll get to there in a little bit, but yeah. Or are you really kind of waiting for your fat pitch? Are you buying things with a bunch of resistance just not too far away? Or are you trying to get, 5-to-1 odds on your money, in terms of reward versus risk? And so Randy, from a process standpoint, was great. And so like what I did in the beginning with Dan's newsletters is I went all the way back, dug into it. The thing I like about that, because a lot of the themes, so he's like an O'Neill disciple, if you will. So he'll focus on the leading stocks and he'll just hone in on those. So each of the newsletters, he'd have 3 per week or so, maybe 4 at that time. And you would just see the evolution of a stock's movement with each newsletter. So I wanted to figure out, okay, what is he seeing that makes him bullish on this stock? Or 2 days later, he was just bullish a minute ago. Now he's bearish. Why is that? And so reading through the commentary, so it's kind of nice to see like the stacking of the bars with each passing month, day, or whatnot, to kind of get an idea of what his thought process was and how he identified patterns. And so I went through that whole process and did like a deep dive with his newsletters for months and just read up a bunch, basically all of them multiple times. Wanted to, like riding a bike, you practice it, you practice. Then once you get pretty good at it, then you don't even think about doing it. You just do it. And so like when I work on my weekend routine and I'll go through charts, I don't have to really think. I just go like really fast, like boom, 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 boom. Cause like you can just see stuff. My brain's been training these last, 10 years or whatever it is. But when you're starting out and you're not really sure what to do, it's a good place to kind of learn from other people. And so he really set the foundation from a technical standpoint, and Randy, really helped me turn the corner in terms of realizing that, even Dan would say it, but in the beginning, you just kind of like, whatever. But there's only like a couple good times, like for swing traders, there's only really a couple good times a year on average. And you really need to take advantage of those. And that's when you make your money. And the rest of the time is you're playing defense. And so Randy was really great in that regard in terms of staying disciplined and really following your process and not just firing from the hip, just doing random things here and there. It's just, okay, what's your routine? Do you get up every day? What do? Do you look at pre-market? What's your pre-market routine? Do you even look at the screens during the day? If there's no setups, if there's none, why bother? You don't want to do some stupid thing off the cuff. So then at night, that's when all the bulk of the meat is done. You kind of go through in the quiet of the night. Okay, come through hundreds of charts on your watch list, and then maybe you set some alerts for the next day. So having just like a routine, getting into the swing of things. And even if the market's bad, you don't want to take a day off. You still want to stay in touch, even though you're not buying things. It's just kind of, create a habit, if you will. So it's something that you need to enjoy doing it. Number one, have a passion for it. But those guys are great. They're Randy's an incredible teacher. So is Dan. And I've learned a ton, and I owe a great deal from those guys. So teaching a friend over here how to fish for himself and not rely. And I think that's key. I mean, when you're first starting out, you want to find a mentor, obviously, but then there's people who are lazy. I think there's a lot of lazy people that trade and they want handouts. They want somebody to just put a gorgeous setup on a silver platter. But even if they do that and you get a winner, it's like, well, where do you sell? How do you know how to sell? Like their plan, you can ask them, hey, what do you think about the stock? Oh, looks good. And so you buy it. For all you know, they bought it like $40 lower. And so you need to learn at some point over the years, and it takes time, how to make the trade your own. Because that's when you have the most confidence. It's like if you're trading somebody else's idea, you're not going to have the full confidence, because in the back of your head, you're like, where am I supposed to get out? You want your hand held. And so you have to eventually get to the point and put in the work to where you are the pilot of your own plane, and you're not relying on anybody else. Your mindset should be, I don't want anybody else in the world managing my money more than me, because you know yourself better than anybody else. And so that's where you really want to strive and get to if you're a beginning trader, is just, over time, you'll go through some back and forth on what style you want. But once you have that style and your edge identified, it's really just going through and how well can you execute your plan, just be robotic about it. And so I think, that's where I really started to turn the corner, is kind of digging into more of the psychological, having some self-awareness that trading every day is not great.
Right.
I mean, I was doing that in the beginning. Just, you want action, you're excited about it, you have good intentions, but you self-sabotage yourself because you're trading all the time. You see one green bar, some random ass green bar. Oh yeah, this maybe is the start of the next move going to the moon. And like every single update you would see after a couple of down days, you thought that was like, that's the start of the move. We're going to the moon. And you just buy these random, setups they're not even setups, and you don't have a rhyme or reason. And so successful trading is, the more bored you are, that's when you're doing it well. You have to sit for weeks, months. I mean, that's by far my biggest weakness is overtrading. And when I mean overtrading, it's taking non-quality setups. So you should really just be waiting for those few times a year, if you're a swing trader, to have all the stars align. And because when you get that herd mentality, you get a bunch of breakouts working at once. That's the most powerful, time of the market, and things are just working in unison. And that's where you really want to hammer things. And then the rest of the time, it's just fluff. It's like, why bother? Like, I mean, I remember looking back in my Q3 last year, it's like all this crap I was doing. It's like, why bother? It's like you're fighting for pennies, and you'd be better off just sitting and doing nothing. So anyway, I'm rambling, but that's kind of where I learned to, take a step back. And it's more than just looking at technicals. You have to identify the process, the routine, and really sitting and doing nothing. I mean, that's successful trading. Is like, it's boring. You got to make it boring. You got to wait for things to come around, however long it takes. It's like, some people will ask, well, when's the next setup coming? Like, I don't know. Could be like after this break we've just had in the market. Like, for all we know, it could take
weeks and months.
Few months. 03 to 03 was 3 years, and sure, there's vicious rallies in between, but you don't know. You just got to sit and wait. And so I think that's where a lot of people can really help themselves, myself included. Again, I that's the one thing that the last few years I've just been trying to fight, and I haven't quite, defeated it 100%. It comes, you just can't get complacent. There'll be periods where you're doing really, really well, and then all it takes is like one slip up, and you're just kind of getting off track. Or it's like if you play golf, you could have like 14 amazing holes in a row, and then all of a sudden you just had a snowman on a par 5. You just triple bogey at a par 5, and you're like, shit. And then the next hole, you keep letting that bad hole snowball. And so from holes 15 through 18, you were just shooting 1 under par, and then all of a sudden you end around at like 10 over. So it's really hard to kind of put together a perfect round. And if you want to put together a perfect year in trading, it requires a lot of patience. And so I think that's a pretty good analogy, and it's very hard to do. I had good spurts, like 9 out of the 12 months last year, and 3 really shitty really shitty months
Yeah.
doing dumb stuff. So you just got to just keep working at it, and nobody's perfect. And you just want to try and strive each year to get better and better. Go back, learn from your mistakes. What did you do wrong? A lot of people want to run from their mistakes. That's the worst thing you can do. You need to hit them stare it right in the face. And because that's how you get better, is you want some constructive criticism. You want feedback from people and what to improve on. So just a little 2 cents on that. I was kind of rambling, but
no, it's perfect.
Yeah.
And I think you touched on things that a lot of people can probably relate to last year, especially. I think over trading was a common mistake a lot of people were making. And I do really want to dive into that and really talk about last year and the championship and how you traded, and also your drawdowns, how you dealt with that. But first, I know you prepared a really excellent few slides, just kind of outlining some thoughts that you wanted to share with everybody. So yeah, feel free to share that, Ryan, and let's run through those.
Sure. They aren't excellent. My PowerPoint skills are on the JV team, but I wanted to write these down because I feel like they're really important, at least for me. And a lot of these are repetitive, but I kind of did that on purpose because I want people to realize what helps me may not help somebody else. I know there's multiple different styles out there, but I titled this Ryan's 2 cents for turning the corner in the market. And I love this little cartoon. It's one of my favorites. I don't know, it's kind of blurry, but every time I show my wife this, she just kind of rolls her eyes at me. But this chart actually looks like the NASDAQ. It just broke its massive channel. And this poor guy is probably thinking of all the money he's maybe losing, or maybe he's short and loving it. But anyhow, I digress. All right. So I titled these slides, Embrace What You Need to Hear, Not What You Want to Hear. Because again, I think a lot of people, what they need to hear, they don't want to hear. They want to run away from their mistakes and don't want to look at them head on. So I think these are some of the things that I've learned over the years that have kind of helped me. So anyway, here we go. So get used to taking losses, small ones. You don't need to be right all the time, but large losses will crush you. This is so elementary, but still people have a hard time grasping this. They want to readjust stops, like their stop will hit, but then it's coming back. And so they won't ever sell. It just keeps going lower and lower. And this is going to bounce back. And then, so like they thought they had a plan, but they really don't. If you're not, cause again, I look back, I think I had my batting average last year was horrible. It was maybe high 20%. Like I was wrong, like almost 75% of the time, but I rarely had a big loss. Like it's just, you just cut them. And cause the big losses, like if you have a string of big losses, you don't have any money left. And if you don't have money left, how can you make money? Cause your money's gone. There's a funny story Dan told, I mean, it's not funny, but I think somebody he knew was his dad was losing a ton of money, and he got a call from the son who called his office one day and was saying, "Hey Dan, my dad wants to talk to you. He's suicidal. He's lost a ton of money, like almost his whole life savings on some stocks. I don't know what time frame this was." And he's like, "What should I tell him?" And Dan's kind of like, "Holy shit." He's like, "Okay." He's like, "So tell him that if he kills himself, he won't ever get his money back." I mean, that's kind of a draconian example, but you got to preserve that mental capital, right? We always talk about mental capital, and you got to live and survive through the tough times. Like the last few months we've been seeing haven't been easy. So when you're out of the market, you think more calmly, you're at ease with yourself. You're not freaking out when you go to bed because you've got all these positions open and the market's gapping up and down every day. You have there's like zero edge in this market, unless you're day trading or really quick. It's hard to kind of set a tight area where you want to kind of buy. And so you just gotta, when the times are volatile, you really have to just know that you're not missing anything. Just sit and wait, and the setups will come again. You just have to really sit and do nothing. So listen to setups, not opinions. Ditch your opinions and those of others. They're worthless. Listen to the market and follow price. This is like, these next few lines are like Brian Shannon lines.
Yeah.
So price is primary. Everything else is secondary and only used for conviction, fundamentals, indicators. Only price will make you rich. So, somebody asked me, what does a price chart tell you about the health of a company? I said, well, it tells you the appetite, the risk appetite for investors, like, do they want it or not? And it kind of maps it out on the price chart, and you can kind of gauge that way. And so their response was, so nothing. And I'm like, dude, you're not understanding. I was like, you could have the best fundamentals in the world. You buy a stock at 100 and it goes to 80. What are you going to do? Are you going to still hold it because the fundamentals are amazing? And then it goes from 80 down to 60 and you're down, $40 on it. Are you still going to hold? It's like, come on, man, just obey your stops and price. You can have, even on the flip side, you could have horrible fundamentals. There could be, year over year decline in rev and earnings, but for whatever reason, the stock's just ripping hard and going to the moon. Right. And it doesn't matter if you buy a stock that has 500% growth in earnings or one that has negative 10% year over year growth. If you make 20% on one and 20% on the other, that's still 20% in your account. They're not going to look at the stock that you bought that had crappy fundamentals and going to take the money away because the fundamentals weren't as good. It's the same. So price is primary. That's my main point. Right. So, in addition to that, it's along the same line. Stop trying to justify how great a company is. It doesn't mean shit if price doesn't agree and it's collapsing. I think the last couple of months have been case in point, big time on that. Throw logic and economics and rationale out the window. Don't overcomplicate things. Rarely does the market make sense. Just get used to it. I mean, I think a lot of people have a hard time accepting that fact. They want things to make sense to them. But it rarely makes sense from an economic standpoint. So don't even try and rationalize with it, because a lot, look at GameStop, right? That's a perfect example. Some of these meme stocks, it doesn't make any sense, but those are the things that you can make the most money on. So if you're stubborn and you look away from it, then you just miss huge opportunities. So you always have to just kind of keep an open mind with this stuff. Stop trying to figure out why something is moving. Who cares? Just play dumb and follow the money. So you need to be flexible and bend with the market. You want to adapt and don't be stuck on one view. Don't be perma bear, don't be perma bull. Learn to be unbiased and simply read the price action. So my motto, I think I mentioned last time, is play dumber than a box of rocks. Simplicity is key for me anyway. I started to really turn the corner when I shut everything out and you just focus on one thing, and that's interpreting the price bars, the patterns, get good at that. And that's all I use. I don't watch TV. I don't watch Bloomberg. I don't watch CNBC. My friends or family members will send me articles. Some scared, the media likes to fear sells, right? So they'll send all these articles about people's opinions. I keep telling them, I was like, don't even send me this shit, because I'm not going to look at it. Just try and not get too biased or too, bearish or bullish. Just have an open mind and even keel and just kind of bend with the wind, if you will. So, right. And I think Mark talks about this a lot. Be great at one thing, not average at many things. Learn to specialize. That's really where whatever your edge is, set that edge and just get really good at that one thing. It's like the Bruce Lee, I don't fear the man that's practiced 10,000 kicks once. I fear the man that's practiced one kick 10,000 times, or whatever the saying is. That same thing applies here. And, it's like if you're a company too, you don't want to have 30 different goals for the company in the upcoming year, because then you're not going to possibly have enough time or attention to all of those to make them really work and be great. You want to focus on 2 or 3 key things and then just focus all your resources to that. And that's how the company can kind of grow and get better. And same thing with trading. It's find one thing. Maybe you're only buying bull flags and uptrends and that's it. Don't do anything else. Maybe you're only buying, sideways channels that break out and you don't touch the market at all until you see that pop up. It may take weeks, months. So you just want to learn to specialize in one thing. I think that's really helped me. For me, at some point, people might disagree with this one, but at some point you can only learn so much on the technical side. I don't want to learn anything new. I've done that over the countless last amount of years. And at some point you just kind of hit a brick wall and there's nothing really new in terms of price action that you want to really learn. I think, staying focused on being rock solid with discipline and executing your plan, that is where sustained success will come from, not learning more technical. So you just need to really be robotic about buying quality setups. I mean, that's really what it comes down to. It's like, are there setups or are there not? Like, that's what your buy decision should be based off. Right now, there's no setups. So why bother opening the screen unless you're day trading? Maybe for day traders, there's tons of setups, and there's, each strategy has an off season. Maybe it's an off season for swing traders, but for day traders, they're loving this kind of activity. But really focusing on the process and being good at that is where you're going to really turn the corner. It's not learning more about the technicals, because there's just more to it than that. If you use indicators, stack multiple things in your favor. Don't rely on just one. Indicators by themselves will fail all the time. It's like if you use moving averages, something's coming into a 50-day. You're like, it's at my 50-day. It's like, well, who gives a shit? It's like, it's just a 50-day.
Right.
But if there's a 50-day and maybe it's retesting a prior breakout spot in that same area, maybe there's an uptrend line from like the bottom part of the base that it's running into. Maybe there's some sort of fib retracement, and maybe there's like a big volume profile level there. That's like 5 things stacked in your favor. So that's what you really want to do, is stack as many things in your favor as possible to kind of help your probabilities. Just looking at one indicator, indicators by themselves fail all the time. So you just be cognizant of that. Like, the only reason I look at moving averages, so all these are looking like a 10, a 21, and a 50. The only reason I look at those is because I know everybody else is looking at them and they're an area of interest, a level of interest. It doesn't mean price will always work. Sometimes they'll undercut for a few days and then reverse, or maybe they don't even reverse at all. They just slice through it and that's it. And speaking of moving averages, I only usually look at them when they're rising or declining, like trending. Like sideways, for me, that doesn't really do a whole lot. It's like if you have stochastics in a trending market, they're kind of worthless because they just get pinned. It's like,
right.
Once you have a powerful trend, it's like, no, it doesn't really work. You have to use them in the right environment. Stochastics work great if you're kind of in a range bound trading environment. So just know that you need to stack things in your favor. All right.
And Ryan, before you go to the next slide, I do have a question on this one.
Sure.
You mentioned try to specialize. What would you say your specialty in trading is? What do you try to focus on and really stick to that one thing? For
me, it's just finding really tight price spots and uptrends. So I want to find stocks that have huge bursts, and I might miss them. Like a lot of times I'll go through some examples in my process, like what I do every day. Like you'll miss them. It'll go up 100% without you, but that's when you throw it on your watch list. So for me, I mean, in simplest form, I want to find continuation patterns and things that are already starting, either coming off a bottom and there's like incredible volume, or the things are already kind of breaking out of the base. Maybe there's a first pullback. You want to see, where the buyers step in again after there's some supply hits the market. I don't like wide and loose price action. I like when things tighten up and get really tight, because that way the cost to find out if you're wrong is really small. And even when you get tighter areas, you can hammer things a lot harder than you could. Whereas if you had like a really wide stop zone, like if something like shakes out and it's super tight, you just hit your whole position there at once. Because if it comes back down at you, it's a really tight area. So for me, it could be a bull flag. It could be a descending channel. It could be, whatever. As long as there's tightness in those patterns, then that's really what I'm looking for. And I can get into a few examples later.
Perfect.
All right. So you need to have a passion for trading. So if combing through charts is a chore for you, it's probably not for you. Like, I love doing this. I love the process, like I mentioned earlier. So if it just pains you every day to go through, or every week and look at this stuff, then maybe, it's no big deal. It's might not be for you. Just give your money to a money manager. And, but I think if you want to be great in anything, you have to have the passion, and a lot of people maybe are in a job that they hate. And so it's like, you're not really going to have the drive to want to go forward. And so, like for me, I love this stuff, as I mentioned, and it's fun. It's not work. I love doing it, but you really need to have a passion, I think, if you want to really sustain success. And along the same lines, get used to coming through hundreds or thousands of charts each week if you want to sustain that success. You don't have to trade, like I said, but you need to stay in tune with the market and establish routines. It's just all about like repetition, routines. And I think that kind of kind of helps with things. Learn to identify proper setups, study how the stocks move. Like I said, it's all about setups. Everything else is just noise. Like I said, there's either setups or they're not. Your buy decisions should be based on whatever your setup is. If it's there, hammer it. If not, just don't even worry about it. So part of that is like, look at historical movers. What did the charts look like before they made their big move? Because patterns repeat. Like people get caught up in looking at the bright lights of the stock going to the moon. But honestly, like go back, especially in like this kind of market where there's not really that many setups, like people should be going back the last 50 years or whatever, find all the biggest winners, or study O'Neill's charts in the first 100 pages of his book. And really just kind of pick apart what that looked like before it broke out. Were there shakeouts in the base? Was price contracting? Because all this stuff looks the same over time. And there's no difference really. It's just like the news is maybe different, but the price patterns are all the same. Right. So I think that's a really great exercise for folks to go back and just study past winners and like forget the move. Like what did it look like before? I think that's really key. Right. Again, I mentioned earlier, avoid options. There's too many things going against you before you even place the trade. Wide, you got time decay, you got wide spreads, depending on, the stock you're trying to buy options for. I was like, trading stocks hard enough. So this is my 2 cents. I know some people are pretty good at options, I'm sure, but I've had a bad experience with them. So never again is my motto. Pradeep talks about these next couple ones in pretty good detail. And I completely agree. Like you need to learn to be a leader and not a follower. Followers will have splashes of success, but will have a hard time making it longer term. Leaders can dig themselves out of holes and continue to ascend to greater heights. You got to put in the work at some point and really learn to, have all sorts of scenarios laid out. So you're not relying on anybody else to make decisions for you. You're going to need that in the beginning for sure. Learn from a mentor, but over time, once you get the hang of it, you need to kind of take ownership of your trading and you don't want to rely on anybody else. So you need to kind of get to the point where you want to be a leader in your trading. Mm-hmm. And, making the trade your own, as I mentioned earlier, dramatically increases your confidence level. And we all know mental capital is incredibly valuable. So that helps. Baseline foundation from a mentor is good, but you need to do a deep dive and innovate. Like, for example, like I learned a lot from Dan and took some things from O'Neill's book. But I didn't, like, to this day, like I've evolved. I haven't just stuck with the same thing over there. They provide phenomenal foundations, but at some point you need to tweak some things. You need to do the research. Maybe there's certain things you've discovered along the way, little edges here or there that kind of help turn on a light bulb in your head. And you need to get to that point where you're kind of putting your own spin on things. And I think that's really, really important. Scale your trading. So what I mean by scale your trading, let's say, for example, you have $100,000 account. If you use like 1% of total equity as like a normal stop, maybe $1,000 is your stop, your max loss in a trade. And then if you're maybe like you use 10% of your capital for a position that's 10K, let's say you double your account to 200K. A lot of people will just still use that same 1K stop and 10K position size. Like, no, you need to adjust accordingly with the growth of your account. So now if you're at 200K, then that 1% stop would be, $2,000, and your 10K position now doubles to 20. So you need to, proportionately adjust as your account starts to grow. And maybe it's not 100%. Maybe you can do it even after 50% gain or whatnot. And you just need to be careful that you're not trying to be too aggressive if the market's kind of arguing with you. But over time, you want to be able to scale, and that's how you can really build your account quite quickly. So buy to sell decisions should be made based on the charts. We've gone over this, not fluctuations in your account balance. So, I mean, I was guilty of this in the past. You would buy something, it'd be up huge. You'd look at your account, it would flash like X amount of number. And then you come back an hour later and that X number is now like X amount lower. It's like, right. I used to have this much and now I have that much in my account. So like, stop doing that. Like, I don't even look at my account really that often, like ever really. So if you trade your plan correctly based on the price chart and the bars, then the money is going to take care of itself. I think you'll find you're a lot more at ease too. when you do it that way. And there's, I think some brokerages have like options to like hide your account balances. And I really recommend people do that because it's just bad decision. You want your trading based on price charts and not anything else. So having self-awareness is big. You know, have to realize it only works a few times per year. So you need to keep your greed in check. Your need and your greed is just eating at you and it's just ripping at you constantly. So you kind of have to tame that little sucker down and know that it's a marathon and not a sprint. Like realize what kind of market you're in. Like right now it's pretty tough. So you probably don't want to be pressing it too much. I mean, maybe some people are killing it, who knows, but you know, you don't really want to be greedy all the time. I would say you should be greedy those 2 or 3 times a year and then learn to adjust. So, and also I think what's important is there's recognize that there's like a transition after a good period to not let drawdowns get too big.
Right.
This is something. So like if you're really killing it and there's always that transition period, right? Where maybe you're like, okay, I've got 5 winners in a row. Oh, there's a loser. Okay, now I've got like 3 winners in a row. Oh, then there's like 2 losers. Okay, now maybe I have 2 more winners. Oh, but there's like 3 losers. And so you kind of plateau, but you keep firing away because you've been doing so good. Right. And maybe now you're like, oh, I have 1 winner, but then there's like 4 losers. So you're kind of, you don't even know it, but you're already starting to draw down from that high, but you're not far removed from your good period. So you're like, oh, I can keep doing it. I've got house money, which I think there's no such thing as house money. You start from a basis of 0. And each trade is kind of like a new trade, but there's always that kind of transition period where you've maybe given back like 6 or 7% already and you don't even know it. And then you go back and you're like, oh, like I should have caught that. And then, you know, there's a spouse rule too. I always joke, like whenever you tell your spouse, you go and brag to your spouse, however well you're doing, like you should just sell every single position you have and just sit there for 2 months and do nothing. Cause every time I've gone to my wife and done that, I've gotten freaking smacked right after. It's just hilarious how it works.
Yeah.
But you need to find other hobbies to kill time when the market's, you're not in a giving mood. Go learn to do whatever. Go rock climbing like you like to do. Go play golf if you like to golf. Do something to keep you away from the screen. Because you don't want to be, the worst thing you could do is just sit in front of a screen and stare at stocks all day when coming in, you had nothing on your homework. So if there's nothing on your homework, why are you sitting in front of a screen to begin with? It's only going to lead to bad things. Sure, you might catch something, get lucky on some random shooting star one day to the next. But again, you got to really make it a boring process. So like I did a horrible job at this in Q3, just kind of recognizing, having that self-awareness. And so you got to snap yourself out of it at some point and then kind of get back on your horse.
Yeah, Leif Sorede is a big fan of the spouse rule. He talks about it a lot on Twitter. And Ryan, I want to ask you with these last 2 points, are there any specific questions that you kind of ask yourself to try to stay in tune with your own self-awareness, how your recent trading performance has been? And if you do notice that you're not getting 5 winners and 1 loser, instead it's 1 winner and 5 losers, what are some steps that you want yourself to take to kind of make sure you're not going to draw down too much once you notice that trend?
Yeah, my problem is I always eventually realize it, but I always realize it like too late.
Yeah.
I think it's really hard to nail a top like on your equity curve and then just go flat. Like there's always kind of like little ebbs and flows, but like for me, like my normal drawdown is like the way I trade. It's like 10, 15% easy, no problem. Like that's standard for me. You know, O'Neill always says like, if you're within 50, I think it's him that said it, if you're within 15% of your highs, you're within striking distance. Like you're in good shape. But yeah, nobody likes to lose money and you should really tighten it up after 10 or 15%. So like half of my drawdown so in Q3, I drew down, like the Cliff Notes version of last year was Jan, Feb was good. I would say June was good. And then end of October through like November, first part of November was good. And that's like standard because people are probably complaining, oh, it was only a couple of good months. But we just sat here and agreed, right? There's only on average a couple of good times a year. And last year was a perfect example of that. You had a few good times to hit while the market was giving and And then the rest of the time it was choppy. And so I did a really good job. My in Q1, like after January, that was kind of like the parabolic blow off top. I think I was up like 70% in Jan. And then after Feb, I was up to like 170 or something, I forget. And then March through May, I was rock solid. Like I didn't give much back. That's when that transition kind of happened. You had to be quick. Breakouts would still work, but then they just get slammed like within a day. So you had to be selling into the breakouts. The strategy didn't change. It was just more, you had to be quicker and take profits quicker. So I did a great job of just sitting and doing nothing for those few months. And then June came and it was another good period. So I went from like that 170 or whatever up to like 287% at the end of June. And then I just, for whatever reason, did a shitty job in Q3. You get complacent. There's a little bit of that transition too. So I think half of my drawdown was actually taking good trades, but the market environment wasn't right. And then the other half, so I think I drew down a little over 30%, right? And so then the other half of that was just doing dumb shit. Like a phoenix rising from the ashes was the little devil on my shoulder. And, he killed off the sweet little angel that was there for the first 6 months. And he was just like wreaking havoc, like, keep pressing that buy button, you stupid fucker, and you just get in this, it's like you get in this trance where you just get in like autopilot. You just hit a button. You're like Homer Simpson with his little, when he works at the power plant, he's got that little hunt and peck thing when it's just he blows up the power plant because he wanted to go get donuts or something. And so this little like metronome thing is just hitting all the enter keys on the keyboard and the thing just blows up. And so I finally realized, I think maybe it was in like September or so. And I didn't trade for like 3 or 4 weeks. And I was like, okay, time to reset. And that's what you need to do. If you're going through a drawdown, just stop trading, because you need to get out of that funk. You need to get out of that rut and start taking walks, find new hobbies, still look at the charts, but don't trade, get your composure back. And then when you come back, you have a clearer head. Then you can start waiting. You're patient because you haven't done it in a couple of weeks or however long you've been sitting out. So then you're not really rushed to come back until the market's set up. So, in Q4, I made money, had a decent Q4. I mean, it could have been better, but what quarter isn't? And so I, got back over 200%, but I never really got back to those highs I had in June because I was doing too much stupid stuff. So if I had realized that, hey, I'm at my 10 or 15% drawdown and it stopped and then did everything else the same, I would have been over, 300%. But instead I was taking action buys and doing dumb things to kill the time, whether I was bored. And it was like some of the worst trading I've done in recent years. And I have a point on here. I don't know if I've gotten to it yet, but it's if you want to compound your count faster, less is more. Had I done nothing, I'd be sitting at 300%. But I was doing the hair stuff. I was like action buying things, like trying to play the ranges, and it wasn't my style. And I got off track, and shame on me, slapped me across the shoulder. But I finally realized it. But you need to I need to do a better job of capturing that self-awareness next time. And that's, something I think a lot of us can work on is just really being selective. Like you need to get to a point where you just hate losing money, even if it's like 2 trades. Like a lot of people are really good at it. Like Mark's probably super at this. Like he barely even had a drawdown on anything last year. Like you have a couple in a row, just shut everything off and just be patient. But a lot of us, myself included, we get trigger happy and it's like, going back to that golf analogy, you really have to focusing for every shot for 18 holes takes a lot of mental fortitude, and it's easy to get off track. And, you will get off track. Nobody's perfect. And you just, the people that are quicker to realize it, those are the ones that'll start to accelerate faster than the ones that maybe take too much time and they're just dilly down around. They make money in a period. Then they keep trading and they give it back. Then another good period comes. So like good times are followed by bad, which are then followed by good again. So, you have to have that self-awareness and just really say, hey, I just had a good period. The spouse rule could be in effect here. And, and just really just, most of the time, you're not missing much. Like FOMO is real. People have FOMO. One little random update. Again, like I said, people think they need to buy and they're going to miss out on the next big move, but the market just kind of likes to do nothing most of the time, and just realize that. I think once you realize that, you're at ease. And so anyway, you really have to find other hobbies and just sit and do nothing. Make it incredibly boring. Play, Dan would always say like, oh, go play golf, go play tennis for 3, 4, 5 months out of the year. And when things will set up, people have fought each other and beaten each other up, and then you're still coming out of there unscathed and ready to go and take your equity curve to greater heights. So,
and Ryan, I've heard a few people, for instance, Mike Webster, he's talked about kind of circuit breaker rules based on your equity curve. So when you're 10% off highs, you kind of have to do this. You have to slow down a little bit. Have you thought about implementing something similar to that?
I did after that debacle in Q3. I mean, I really didn't trade like the late October through November. I placed like maybe 2 trades from the end of November through like the first part of Jan. And, I was just like, there were some times you can make money like in December with some of the swings, but I was like, you know what? I was like, I know better. There's not really there weren't a ton of setups that I liked. It was more just range bound trading, which people probably took a lot of advantage of. But he's so right. You need to have some sort of process in place to say, hey, I'm at my 10% and just cut it off. Like people, it's almost like they can't sit and do nothing. Like a lot of people are like ADD. They have to always be trading because it gives them some sort of stimulus in their brain or whatnot. But again, like for the 900th time, successful trading is boring trading, and you just need to sit and do nothing for most of the year. That's what's required. It may not be fun. It sounds so easy, but it's so hard for many of us. But it's what's required. And if you want to just keep growing that equity curve fast enough, then that's what you have to do. And even, how we chart on technicals, if you have, like O'Neill always talks about, like if you have a channel overshoot after a long run, that's usually a good sell signal. Like, believe it or not, like if you go back and look at your equity curve and you chart out your equity curve and your equity curve, if you're on a nice trajectory, and then you get that channel overshoot, that applies to equity curves too. You'll be amazed. So if you're ever looking at your equity curve every now and then, and you notice one of those like channel overshoots, it's probably a good time to stop. And it's just amazing how this stuff kind of goes into other parts of trading. But it's a great point.
Yeah, absolutely.
All right. Learn to fade your emotions. So whenever the smile on your face couldn't be any bigger after a gain, it's probably a good sign to reduce. I mean, I feel like there are certain times throughout the year where I'm like, if I had just done the exact opposite of what I was actually doing, I wanted to do, would be batting 1,000%. Yeah. You have to keep this stuff robotic. Don't let your emotions get in the way of things. They're just getting in the way of reaching your end goal. So we already covered this one. The less you trade, the faster you'll compound your account. Overtrading kills performance. The tortoise beats the hare. This stuff takes time. It's a marathon, not a sprint, right? We want to be doing this for multiple decades from now, not just 10 days from now. So I think once you realize that, it's a little easier to hit that point home. So action buys usually end in regret. I hit on that. Like, why bother? Wait for those quality setups. This is a quote I love. Dan always said, if they want it, I want it. If they don't want it, I don't want it. Simple as that. And this kind of goes to like institutions piling into a stock. Mm-hmm. Like if you're at a breakout point, at a key technical area on the chart, and it starts to break out, but it doesn't really gain traction and just comes back down, he would say, hey, the best racehorses don't go back into the starting gate. It either does what it's supposed to do at a key technical level or it doesn't. So if it does, I want it. If it doesn't, I don't want it. And so again, it's going back to simplicity. Simplicity really is key. Mm-hmm. So be prepared for every scenario. I always assume every trade is going to be a loser, and then I'm pleasantly surprised when they work. So that's how I usually mentally prepare myself. I'm just assuming it's going to stop out. That way I'm not like trading on hopium and thinking, then you're dejected because it didn't do what you thought it would do. Just have kind of like that opposite psychological mindset going into every trade. Know every scenario. Hey, if the stock gap's down X amount of percent, am I positioned correctly? Not everybody trades biotechs, but if you trade biotech, I recommend keeping it less than like 5 or 10% of your total equity.
Right.
Because if something goes to zero, but you had like 5% of your account on it, you could withstand like a 5% drawdown, like no big deal. But if you have like half your account on that, you're just asking for trouble. Yeah. So just be careful. Focus on stocks that know how to make linear moves, like multiple up days in a row. Avoid choppy stocks. I want stocks that know how to make 3, 4, 5 days in a row, just boom, 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 boom. You don't want something to like chop around, like stuff like let me think of one, like maybe like an Airbnb,
Roblox a little bit.
Roblox, Airbnb. That stuff is like dog shit to trade. They could be amazing investments, like if you're an investor, right? And these things kind of go through their IPO phase, and you're maybe patient enough to sit on these things for a few years or whatever, they can work out beautifully. But in terms of trading, it's just like 2 steps forward, 3 steps back, 3 steps forward. It's just like, there's no rhyme or reason to this stuff. It just chops around. So for trading, Roblox made a decent move. I think when it first broke out from like 80 to 110 or something, that had a nice, decent move. But other than that, you can just look at a stock's history. And if it's just a choppy piece of shit, chances are you don't want to really be messing with that unless you're an investor and you know the story. There's a fundamental reason behind it. But so I think that's really helped me. I want to focus on things that know how to move. Selling into strength helps keep your equity curve on the offensive. Sell when you can, not when you have to, type of thing. You don't need to be smart at all. In fact, the dumber you are, the better you will perform. So if you're a good listener, you can make a killing. Like, never argue with the market. Stop overanalyzing shit. There's either setups or there aren't. Like, setups should be the basis of your buy decisions and nothing else. Like, people that get all infatuated, but the inverted yield curve, like, I can't even spell that. Like, none of that stuff matters. How does that stuff make you money? It's like looking at a chart and depicting the patterns and buying setups. That makes me money. I don't know, maybe other people make money elsewhere, but I don't care about any of this other stuff that has no value add to my trading. So again, keep the noise out. Prioritize your time to this. If you don't have time, make time. I work my ass off at this, and so should you. It's like if you're trying to lose weight, but you make up all the excuses in the world. Oh, well, I don't have enough time in the day. I have to like take my kids to school. I have to go to work. It's like bullshit. Like, if you get up at 6, get up at 5, and then now you've got an hour to work out. There's excuses that people want to make excuses for things. And I mean, if you want something bad enough, then just make it happen. So the number of setups in the market tells you when to buy. You don't need an indicator for that. If you're a beginner, learn from people with a proven track record. I think this is key. So a lot of people can say like nice quotes that sound nice, but you never see a chart for them. So like, for all you know, they could be a freaking dog shit trader. Like, it's a legitimate question. Like, how do you know? It's like, they may say a lot of things that sound good, but like, what if they suck at trading? I mean, maybe I'm way off base there, but like, for me, I want to learn from people who've been in the trenches, have done it before. Learn from a Dan Zanger, like 10K to 42 million. Learn from a Minervini. Learn from a Christian Koulamagi, 5K to like 100 million or whatever. I mean, learn from people that have been in the trenches. They've been through the ups and downs. They know how to do it, how to take care of the process. And that's who I would want to learn from. So just be careful. And last but not least, you can do it, baby. Let's effing go. I think it's key to believe and bet on yourself. So not all people, but a lot of people, I think, see other folks that have had success, not even in trading, but just in business or sports or whatever. And they think they can't achieve that level of greatness or whatnot. Or if you're sitting at the couch and you see some like infomercial and somebody made just like $1 gajillion on some simple idea, you're like, I could have thought of that. How did that person do it? You know what? They actually just got up and did it. And it's like, all it takes is one little breakthrough to keep you motivated. I remember like, I sucked at golf, like in college, and my first few years out, I had these old hand-me-down clubs. And then I finally bought some new clubs, but I still, sucked, but they're a little better, a little more forgiving. And so I started going on YouTube and researching, okay, what is proper takeaway on the swing, backswing, follow through, all that stuff. And you start to chip away at it. And then you're at the range hitting hitting balls, you can have 100 balls, 99 of them you shank. And then it's that one that you just absolutely nut. You flush it, and it's the greatest feeling in the world. And it's basically telling you, you can do this. You're starting to make progress, and, never give up. And then, I went from like a 24 handicap or something like that down to like a 7 at my height. I haven't played golf in a few years. Kids changed that, but, same thing with trading. It's like you go through all the grunt work. You study the charts, you go back and look at historical movers. And then when you see that same pattern on stock XYZ in the past show up again in real time, and then you buy it, and then it does exactly what it's supposed to do, and you make money on it. That really was a key for me, is like the work you're putting in is actually starting to work. And when you see that progress, it's just the greatest feeling, and it keeps you motivated and wanting to go. Of course, you're going to have setbacks along the way, but you got to stay motivated and just keep charging ahead. Like anybody can do this. You just need a few brain cells and the drive and the will to want to do it. Anybody can do this. If you put in the work, you can make life-changing money. Again, I think the story when Dan had a seminar years ago. He went to one of Bill's back in the day, and the first thing Bill said, was, if you do your homework, you can make more money than you know what to do with. And you just never give up, no matter how grim life is. Again, not even trading related. Just keep at it. It's one big process. The joy in all this is the process. Like once you get to your goal, like that's it, the goal's done. So for me, the joy is like the grind. It's the day to day. There's going to be ups and downs. The downs kind of tell you a little bit about yourself, like how you're going to bounce back. Right. And this is the greatest game on earth, and I love it. And it's challenging at first. Well, I shouldn't say at first, it's always challenging, but it's something where if you love it enough, you can absolutely do it. So don't let anybody tell you otherwise. Surround yourself with people that are going to help you get to where you need to go. And don't let everybody tell you that you can't do it, because that's just BS. So my 2 cents.
No, that's perfect. And I think that's an awesome sentiment. And I want to ask you, you've mentioned a few resources that people really want to go ahead and do the work. Dan's previous newsletters, the first 100 pages in How to Make Money in Stocks. What are some other kind of good resources that you think to study for people who want to go out and study history and try to find and analyze those chart patterns? Yeah.
So in terms of books, not necessarily chart patterns, but I think Bulkowski. I forgot. Does he have like a site that has like all the different patterns in the market?
I believe so.
There's statistics. Yeah. You can ignore the statistics. Doesn't matter. But like just visualize for a visual reference. That's a good one. If you're into candlesticks, I don't use candlesticks. I just use bars. But I think Steve Neeson has like a candlestick book with all the different patterns and whatnot. But in terms of books, obviously Bill's book is amazing. Minervini's books are amazing. You've got the Darvis, the Livermores, Brian's book is great. John Boyk has great books. I thought like Marty Schwartz's book was really good on his experiences with the market and kind of
Pitbull, right?
Yeah, Pitbull. That one really resonated with me. And the Market Wizards books, obviously. But I will say though, you're not going to learn everything in a book. There's no substitute for seat time and experience. Yes, you'll have a foundation, but you need to know that there's more to it than that. You have to see things play out in real time over and over and over and over again. Oh, of course. How could I forget a good resource is you, dummy. Your stuff.
Thank you. I'll send you the check later.
Yeah. Well, think of all the people you've had on there that have been successful at this. And it's a luxury for all of us to go. And the thing I like is there's people with all sorts of different styles too. So, maybe somebody doesn't really like can slim so much. There's other people that do it another way or vice versa. So again, I think we have it easier than ever nowadays. And there's so much people that say they don't have enough resources or they're just lazy. And it's just, we have it so easy. Like we talked about last time we spoke, the whole getting out the newspaper, finding the price on the newspaper stock section, putting it on a plot chart. Like everything is just so easy these days. And the information's there. You just need to know it just takes time to go in and actually just do it. So.
Absolutely. And I really like that quote. It kind of goes back to this, that I'm probably butchering it, but something along the lines, the expert has failed even more times than the rookie has tried, or something similar to that. I think it's very true. And if you think about somebody like Minervini, he's probably taken more small losses than any of us have even traded or tried to trade a stock. So remember that. And it takes seat time, as you mentioned. And I think it's valuable to go through these corrections, even though they're not fun, because you learn how to deal with them, and you'll hopefully be better the next time through. So I think that's important to remember.
And I want to stress to people too. I think it was Tom that said it. It's like people that are new, they probably, especially on like Twitter, you see people doing well, but that's all you see. Right. Behind the scenes, it could be something different. So just know that the people that are teaching, I think he said, the people that are teaching you how to do this, they're fucking up all the time too. Like I fuck up. I mean, I feel like I know what I'm doing, but I still get off track and screw up. So don't feel discouraged if you feel like you're missing out on something. Oh, everybody else is making money, but I'm not. Like, just no, you're in good company. Right. Even the people that have been doing this years and years, we all still struggle at some point or another, maybe to some degrees more than others, but just know that you're not missing out on a lot of stuff. Other people are screwing up too. And don't let that discourage you from pushing on.
Yeah. Everybody buys breakouts that fail the next day or the next 5 minutes. Everybody, that happens to everybody.
Like I'm open to admit, like I'm wrong all the time. Like my trading, I liken my trading to like a broken clock. Like I'm right a couple times a year. You need to take advantage of that. But then the rest of the time, like you're wrong, and you just need to keep those, how much you let yourself stay wrong.
Right.
Kind of separates like the good from the great.
Right.
So anyway, it's just don't feel like you're being left out, because everybody else is in the same boat pretty much, just to different degrees.
Absolutely. Perfect, Ryan. So I want to pivot a little bit and hear about kind of your experience over the past 2 years about trading in the U.S. Investing Championship. Obviously, you performed incredibly well over the past 2 years, 448%, I think, if I remember correctly, last year, and just over 200% this year for an amazing compounded return. So I'd love to hear just about kind of your motivation for competing, and also if you're going to keep doing it this year as well. I'd love to hear that as well.
Yeah, I'll first off and say, people will kind of like the haters that will joke and say, oh, well, anybody could have made money in 2020, or even last year was harder for sure. But it's like, isn't that what you're supposed to do in a bull market, is take advantage of it? It's like, I'm no smarter than I once was. I'll admit that a bull market makes everybody a genius, right?
Yeah.
But I mean, you still need to know how to take advantage of it. Like if you got your shit together and you're studying every day and you've got your alerts set, you're doing your routine, you've got setups identified, and you're there to take advantage of it, that's what you're supposed to do. It's like, what do you want me to do? Do you want me to lose money in a good market? Like, no, I've already done that for 4 or 5 years in a row when I first started. I don't want to do it again. And so that's what you're supposed to do in a bull market, is try and make as much money as you can. Because when the shitty times come, which is most of the time, then you don't have to feel forced into making trades in an environment that's not optimal, right? So you want to get while the getting's good, and then limit your drawdowns and the other 75% of the year when it's not, right? So that's ideal. But the reason I will say, I think entering the contest, and Norm's done a fantastic job running this thing, and I trade a lot better when I'm in it, because I know people are watching. Right. It shouldn't matter, right? You should, like, even if you're in your behind closed doors, you should be doing the same thing that you're doing in the contest. But I think there's that degree to where, people are watching and you want to really be on your A game and trade and trade well. And, but I'm a competitive person. I like, I played sports growing up and loved it. And it's just fun to kind of see how you stack up against other people. There's other great traders, who have done the contest. And I think it's just a lot of fun. And I've certainly enjoyed doing it. I mean, I'm not going to do it this year, just because I've got a ton of crap going on in my life, and it's just one less thing to worry about. But I mean, for people that really love it, I just say go for it, and you never know. Don't sell yourself short. If you think you can do it, then just by all means go and do it. And it's a fun thing, and I certainly had a good time doing it, and so it's just you just kind of see how you stack up to other folks. It's a fun thing, like I said, and I had a blast.
Perfect. And obviously 2020 mopped up a lot of people's mistakes, even if you didn't quite buy right. Obviously, we had that bull market, kind of the driving force behind everything. But I'd love to hear how you think, we've talked a little bit about this, how 2021 is a more typical year with only a few times where we could really step on the gas. But how would you differentiate between 2020 and 2021? And what were the kind of main adjustments you made, if any, to your style to try to adapt to that new environment?
The style, I would say the approach was not changed at all in terms of selection criteria. I would say where you had to differentiate was the duration of how long you hold something. Because in 2020, you had those nice multi-week moves, where in 2021, you'd have a multi-hour move and then it would come right back down. And that's what I realized in starting late Feb, like March, you still get breakouts, but then it would last a hot minute and then just come right back down. So I think that's what Mark was doing really well. He was selling into it and adapting. Like the first part of the year just really sat out, and after some feedback from a few failed breakouts, it's like, okay. So for me, I would say the approach didn't change. It was just the market was a little different. So like, let's say you go back to like your 5-to-1, or the Paul Tudor Jones, you want to
get a loss. Yeah.
Yep. So once you hit your 5-to-1 in 2021, maybe you would reduce 20% of your position and let the other 80% ride, or in 2020, I mean, in 2021, if you hit a target, assuming you hit a target, you should be scaling out like the opposite. You should be scaling out like 80% of that, and then only leaving a very small percentage because stuff just wasn't working. It was very quick, short-term trading. So I think that's, if you're able to adapt and take more off the table quicker once you hit a certain target or whatnot, then I think that's where people did really well, and they were adapted, at least in the interim months where the market wasn't moving in Jan, Feb, or after Jan and Feb. Again, June was good. End of October, early November was good, but in between then you kind of had to be nimble.
Absolutely. And do you have a sense of how your kind of key summary statistics change from year to year? I think in our first interview, or back almost a year ago now, you said your batting average was in the low 30s or 35%. So it looked like that dipped a little bit, but which I think will surprise a lot of people, that you can have a 200% year and only have a 28% batting average. But I'd love to hear maybe average gain, average loss, and maybe even holding period, because you mentioned you do have to be quicker in a choppier environment.
Close your ears. I couldn't tell you off the top of my head what my average gain and loss was, but I do know 30% is like my norm. Like every year. Maybe I'll strive for it one day, but I highly doubt I'll ever get to a point where I'm in a year where I have greater than 50% accuracy. Like I embrace, it's just one big math exercise. Like I embrace the process. I know but you cannot take, with my accuracy so low, you cannot take huge losses. So I am very quick to just cut stuff when they're not working. And if you get stopped out and something works again, just buy it back. And so that's what I like to do a lot. So yeah, my accuracy doesn't change much from year to year. Even in 2020, the best year we've had in decades, it seems like, it's still in the low 30s. And I don't really see that changing. I'm going to try and improve upon it, obviously, like by trading less. Like I want to trade a lot less, like 50% less, let's say. I mean, that really is my goal, is to just really wait for those fat pitches to come across the plate and work on being bored to death. And, but I embrace it. I know that even if I have a horrible accuracy, it can still be done, but you got to let those winners run. And when those good times come, you better take advantage of it, and you better let the winners run. Otherwise, you're going to get stuck with, pretty tight window of margin for error, I should say. So
Right.
I'm trying to bump that up, but I really, my goal this year is to trade like a lot less. Like I made a few trades the last few weeks. I'm up like a whopping 3 or 4% or whatever it is, but I feel like that's like the equivalent of 30 in this market. But I've been pretty proud of myself recently of just not doing anything and just really sitting and waiting. And so that's my goal this year, is to just try and be patient, because I've been, at times in the past suboptimal at that. And I just really want to, take my trading to the next level and just do more stocking, more sitting, and less button pushing. So.
Perfect. And are there any specific kind of rules you've set for yourself, or things you're doing to try to trade less, or is it just kind of trying to be cognizant of you don't want to trade as much and just being
I haven't even looked at the screen. Like, I don't look at the screens during the day. Like, all the work, like I said, should be done at the quiet of night. So,
right.
And I can go through my routine on the weekends too, but I'll go through before I go to bed all the charts in my watch list. So you start at the weekend, I go through like the entire market on the weekend. I won't go through the entire market during the week, but I'll have that as my baseline, put things on my main watch list. So at night, that's what I review as the main watch list. Depending on the market, it might have 100 stocks. Last year, or 2020 had like 1,000, right? So I'll just do that. Is anything close to a buy area? And if there is, I'll throw it on my focus list. I'll set an alert on my phone. So when I set alerts for stops and buys, I set 2. So let's say you want to buy a stock at 100. I'll set an alert at 99 to know that, hey, it's getting close, because it takes time. So on my phone, I think you asked about, I'll do all my charting on the main computer. But when I place my orders, it's always on the phone, because I'm always on the go or whatever. And I always have it on me. And so I'll set 2 alerts, one at like 99 to let me know, hey, it's getting close. So it gives me a few seconds to like get my phone out, log in, get the order ready. And then once it hits that 100 mark, then I'm ready to go. But basically, if there's no setups after my night review, I'm not even gonna look at the screen the next day. Like, why bother? Like, if a trade's not your homework, then don't buy it, right? That's what we always try and strive for. So I've been doing a little bit of that, trying to just, as boring as it is, just doing other things, hanging out with your family more, and just, I have a day job during the day, so I'm doing that anyway. And I think there's something to be said, like an advantage for folks that maybe work full time, is if you don't have as good a discipline, it doesn't allow you to stare at something and then get wooed into buying some day trade setup or whatever. So I think some people will have people that are working will maybe find that benefits them, but
right.
If there's, and I memorize, so if there is a buy opportunity for the following day and my alert goes off, I still really won't look at the screens, but I'll look at the alert. And if I'm by my desk, I'll open it up on the chart. Or if I'm like out and about, like TradingView has an amazing mobile app. Like the charts you can do on TradingView are really crisp. And so I'll use that. I'll pull it up to see if it's crossing a line or whatever, just to make sure it's not like a little fake up. So I'm really trying to implement like getting away from the screen, like during the day, not even looking at it, unless like there's a buy trigger that goes off. And in this market, we haven't had any really. So it's been pretty easy.
Yeah.
Whereas in the past, I would get caught. I know there's nothing there, and from the night before doing all the homework, and then you're just still sitting in front of the screen because you're bored or whatever, and then you get suckered into every now and then buying something because it comes out of like a little 15-minute pattern or some bullshit little pattern. And so I'm trying to get away from that and just focus bigger picture and really going for the bigger fish.
Perfect. And I'd love to just kind of go through a few of your trades from the last year, maybe in the beginning of the year as well. And I'd love to see a few of your big winners as well as big losers, and kind of talk through the process for all of those.
All right, so this is an example of the QQQ. We can just kind of walk through this real quick from a general market standpoint. Sure. So this was the beginning of the year in Jan, and this chart doesn't really do it justice, because if you pull up a lot of stocks, like they're just going off the screen, like just parabolic as can be, blowing off in Jan, Feb timeframe. So, to start the year, you kind of have like this nice little channel that's going, it kind of goes above it, right, which is usually like a sell signal, kind of runs out of steam. And then it wants to kind of just grind up again. We get these little rising channels. That's usually like a sell signal. I mean, they may like frozen rope up there for a while, but eventually they kind of like get knocked off. But so then this is where the tough period came, is the end of Feb, March. It's just kind of all basing around, and people maybe took advantage of April. You get a little nice move through that little pattern down here. It comes right back up. Can't really break out again. Standard breakouts where all the struggles usually happen. So it kind of vacillates around for a few weeks. Doesn't get anywhere. Gets slammed back down again into May. Puts in a double bottom here, right at this uptrend line. And then it kind of works its way back up. A little higher low here. Then it gets back up. This is where the second mouse breakouts can be powerful. And it wasn't really easy if you're looking at a Q. Maybe if you're looking at other stocks, maybe they just blast it out of there. But this is where like you had a good June period. And then it kind of got a little choppy in here. This is where I was doing all my dumb shit. And it made actually a nice little move in the end of August. But even though the indexes are going up, a lot of the stocks were still struggling, unless you're trading like BNTX or mRNA.
Moderna. Yeah.
That was really, really it. And then you put in like a head and shoulders here. We get a nice little fake down, start of October, reclaims, puts in a higher low, and then eviscerates this bearish pattern. It's like whenever you get these bearish patterns that get eviscerated, those can lead to nice moves. And so you had that's what led to our nice, like this day right here, it just faked out that neckline, gapped right over this descending trend line, and boom, just made a nice move. And so that was another good time of the year. And then since then, it's just been wide and loose. There's no like ledge of support or resistance built up in these. It's just kind of like down, up, down, up. So we were getting some wild gyrations like towards the end of the year. And then, we shook the channel here, got back in, and then it finally had one of those 1, 2, 3s to the downside. And then that was it. I didn't have today's bar on. This is from yesterday. But so, I mean, even though this is like a massive reversal candle, maybe it's some short-term capitulation. Like these kind of breaks, they take a long time to repair themselves. Like even if we V'd up, like people might get excited for a V. We could V all the way up, get people nice and excited. And then we would run right into this prior, support area, which may not be resistance. You can run right into this underbelly, which may be resistance. And it might start a bigger right shoulder pair here up here. It'd be a perfect scenario to get people back in the water. Like, oh yeah, we're going back up to highs. And I could if we had that scenario, I could totally see this rolling back over again. Who knows? Maybe we can go to lower lows. I have no idea. Like people that I'm not going to try and predict because I have no clue. And a lot of people like to try and predict, but nobody knows shit. Like nobody knows what's going to happen. So that's why you got to take it one day at a time, and you get the puzzle pieces every day, right? So you just start stacking them and stacking them. Like there's no edge here unless you're on some small time frame. Like there's just no setups out there really. I mean, there's maybe a few starting to emerge, but like if you have like a Bros today, that's kind of like faked out, like it's neckline.
Or some energy names.
Yeah, energy's been super strong. Financials were strong for a while before they started to kind of roll over, but there's a few things starting to kind of emerge maybe, but we just need a lot more time. So getting into some other examples from last year. Let's see. I think I went over like a lot of the ones in our first video. So let me go to like EH, for example. This is earlier in the year when we were going parabolic. I missed the entire thing from, 30 to 90. But I mean, it was getting pretty extended. It's if you kind of look at it here, it's kind of like an inverse head and shoulder. If you were to flip it, this would be like the left shoulder. Here's the head. Here's the right shoulder. So usually when you get these big moves, these things usually just crater and fall over. But this thing was actually getting pretty tight in here. It was kind of holding this inverse level of support. These two kind of bars. Here's a 2-hour chart. But I think on the daily, even it might have sported. I can't remember if it was this one or another one. It might have sported like an NR7, like the narrowest range, the last 7 trading days, and just got nice and tight under the line. And I hammered this thing here. Even though it didn't make it up to this bigger line you could have bought out of, but it went from like $72 or whatever, right into new highs past the century mark. And if you notice too, the thing I'll say about century marks, like notice the first time it went up, granted it had a massive move. It used all of its energy to get there, but the first time it hit a round number 100, 200, 300, it's amazing how those work as resistance. But if you get a second time through, those can be pretty powerful. And this one was just, it moved up into new highs, retested, kind of flagged out here, and then went to 120. So you got like this little naked reversal bar up here. It's kind of like naked by itself. So this was also like a measured move. So if you consider this a flag, it's kind of sloppy. But if you had like a breakout here and you flag out, and then you got the final part of the move, it's like a measured move. So you take the height here from like 80 to 100, and then 100 to, so that's 20 points, right? You add 20 points to the flagpole high. You know, they're not ever perfect. It's plus or minus a few here or there. So I took that one as a trade earlier in the year, but like things like FLGT and what were some of the other ones? Like Tiger, Futu, all the Chinese or Asian fintech stuff were making big moves. I think we went over those last time. But like for summertime, like one of the few things I did right, and too bad I had like microscopic size on it, is like this little BTBT is like, I think, a crypto miner. And you look at this and say, why the hell would you buy that? And let me tell you. So this was my parabolic back in Jan, and then it's just been getting crushed, like higher low or higher, lower highs, lower highs, lower highs. And it's just been like a slow drip down. So there's no shortage of seller supplies on the left of this chart. But this was a game changer here. So normally you would look, normally they say, look to the left of the chart. And what does it look like? If there's a ton of overhead, like it should turn you off. But the thing that I liked about this was, I don't know how much, this is almost 200 million shares. I can't remember how many shares were in the float. It's probably like 20 million. So the float turnover was like probably somewhere around 10x that day. So it was a complete character change in the stock. So anybody that was shorting probably got blown out of the water on this day. Anybody that was holding long probably gave up in these 3 or 4 months that it's just been grinding down. So you get a new set, you get everybody else completely washed out from over here. And then you get a brand new set of buyers or whatever the news is, shorts covering. It's just a complete new crop of investors coming in. So you get a massive rip up on like incredible volume. And I can show you too how I kind of scan for these things. So if you notice the next few days, it's like closing on lows, close near lows, close near lows. But then this day was the character change where it closed right near the pivot, like right at high. So you're like, okay, this is a little different than the first 3 days closing near lows. Now it's closing a high. So I better take a look. So if you're looking in the hourly chart, you can kind of see it's like a nice little contraction pattern, kind of like a VCP, like Mark might have to a smaller degree. So like, here's a tight little entry here, excuse me, that I took advantage of. And then it kind of held, it still held over the breakout spot, but it kind of put in lower highs, lower highs, lower highs. And then the next day at the open, bam, it just took it out again. So, I mean, this is where you can just kind of, here's like kind of a sit / squat retest, and then bam. So once you get this, you can just like sit on it and hold it and just let, you know, if you want to trail it with like a 10-day moving average or something. I sold it like maybe like $15 and I missed the last leg, but look what I did. I went right into prior resistance, these mini lower high peaks here. If you draw into the downtrend line, didn't quite make it, but it got pretty close. I mean, I think they just doubled in like 4 days. So don't get too greedy on these things. It's a piece of shit little stock, but I mean, these are the kind of things you got to look for, like these huge volume changes. I mean, that can start, even if it's like a doggy stock like this, it can really make some nice quick moves. And so even though it's not like a CanSlim quality name, you should always be looking for these things, especially like a smaller account. I mean, these are the stuff you can really accelerate and grow your account quickly with, but versus trying to like trade a Airbnb or some of these other slugs where it takes 9 months to get like 10% or whatnot. So this is one of the few things I did right in Q3. MRNA, I didn't buy this one. I should have. It was kind of like, this reminds me of FLGT earlier in the year. It's like these patterns repeat. It's like the same kind of thing. It's like contracting. You get the nice first move up, pulls back, goes back up. It kind of overshoots a little bit, but doesn't get far, pulls back, but they step in at a higher price here. You get a little shakeout. Again, you want to shake out on the base. You could draw like a little descending trend line here. It breaks this and it's starting to turn the corner. The selling pressure is kind of abating a bit, goes back up to the highs. You know, sellers step in again at this, what is that? Close. It's closer to round level too. These round levels, again, they're big psychological levels. And then so you get higher lows, it breaks out. Again, we talked about last time, don't chase a breakout because they're going to retest more times than not. So you can have this thing come back, retest. You can buy it like here if you missed it, you know, on a continuation type move. And it doesn't really go that far initially, but you have zero heat basically. If you were to even buy here, like not once was your stop ever in jeopardy. You just kind of sit with this stuff. And then, I probably would have sold it if I had it into this 300, because you're breaking this little channel here. But, I would have loved to tell myself that I would hold it all the way up to 500, but I know I probably wouldn't. But that's why it's good to maybe have like a runner, sell 80% of it, leave that extra 20%, see how far it can go, maybe trail it with a 10-day or something. Because a lot of times I'll use, like, if you have a Momo mover, like a 10-day or 21-day is like your guide. And, I'll sell it early, even if it doesn't break the 10 or 21 day, and thinking it's too extended, and then it'll gather itself, maybe pull back a little bit and then keep going. Right. So you just don't know how far these things will go. But that was a nice winner. I didn't take it, but people maybe crush this one in the summertime.
And Ryan, if you could bring up another example, I'd love, I know we chatted about this in the last interview, but I'd love to talk through your overall chart setup and why you've got it set up with very, very clean, look to that. And the decision-making behind that, basically.
Can you see this okay?
Yep, the cues.
Sorry, I've got the, so this is how I usually like to look at it. So I'll have 4 boxes here. So my top left is the daily chart. My top right is weekly, bottom left, hourly, bottom right, 30-minute. I don't really look at this one much. Hourly, sometimes I'll dig into that if there's like a more precise entry, but most of my buy decisions are on the daily. But I like to look on the weekends, for example. I'll go into the, like a weekly. I won't go into monthly. You can go into monthly, but I'll usually just start with the weekly and figure out, are we trending or are we not? And I want to kind of have, again, not miss the forest for the trees. I want to have a nice broad picture of what the market's doing. And so, like, recently you can see here, we just had this massive channel, or this massive wedge that's been wedging up. And then we finally lost it. Right. So, like, I don't want to say I'm praying, but I'm hoping the market gods will be very forgiving and just kind of like something like this, even pull in a little bit more, and then just slowly gather and just round out. And then, like, maybe later on this year or next year, create like a nice like cup base, or even go around, like, do nothing for a year, just go sideways and then come back up. Usually when you have a big break like that, that's sometimes like a scenario that'll play out, or we could just keep tanking. Who knows? But so I'll start on the weekly and use that as kind of like a guide. So, like, for example, what I'll do on the weekend is I'll go through and pull up in TC 2000, like US stocks, for example. I'll filter for price. So you start with the Berkshires. There you go. And then, so I'll just start going like boom, boom. My software's kind of slow. Boom. And and my eyes are trained now. It may take people a little bit longer. So I'll just do this for a couple hours. Maybe it doesn't take that long, but I'll just go through all the stocks, and then maybe you can do the same thing for like ADRs, or there's somewhere in here. So I just use that as like my main starting point for my weekend work. And so if there's like a pattern setting up, there's nothing here on this one, but I would add this one to my watch list. There's like the little star up here. You can click to add it to your watch list. So I'll have my main watch list here. I haven't cleaned this up in a while, but then I'll, like, at the end of, like, during the week, once I have after the weekend work's done, I'll have, at night, I'll go through this one. So I'll start with like alphabetical order. I'll do the same thing. I'll just kind of comb through, maybe something just got obliterated and I'll take it off. But another thing I started doing the last few years is how I found BTBT is I'll go through each day. I'll go to US stocks, and then I want to know what stocks made the biggest move for that day. And you'll get, when you do this, you'll get a lot of these like penny stocks that you can just ignore. But I'll just go through these, like, these big movers of the day, just to see like some of the volume, like some of these are just dog shit, but like these volume moves are just huge. So I kind of want to know, are there certain things like that's garbage? That must be like a SPAC or something. Penny stocks I'll ignore, but what's this Bally? $30 stock? Looks like shit, but there's a character change with volume coming in. So this is kind of how I found BTBT is you get these usually on the biggest movers of the day, you get these big volume surges. And a lot of times there'll be stuff like sitting near 52-week lows, but I mean, a lot of these I'll ignore, but I'll just kind of comb through to figure out, okay, what are people piling into? Like this MDRX, I think I already have it on my watch list, but this is something I would definitely put on mine. Like, it's running into some resistance here potentially. but maybe after like a few weeks, this will set up, flag out or
Right.
something, and then maybe it wants to take it out. So I'll usually do this first, and then once I have everything on added to my watch list, then I'll go back and go to, you know, my favorites and do that. And then if there's something that's just about to set up, I'll put it on my focus list, which I don't think I have anything on here. Maybe I have a few stuff. So like, I haven't really cleaned this up, but like bros, for example, today, this is almost like a head and shoulders pattern. Like here's a left shoulder, head, maybe this is like a right shoulder. So this would be like the neckline. And so you could say, oh, okay, it kind of wedged down into it, but it shook out a couple of times. Like here's the first shake coming down again. It's almost like a double bottom shakeout. And then it just ripped through this descending trend line today. So maybe this thing, it doesn't like this compared to others, it didn't quite make it down to this initial IPO low. So in this market, that's like a sign of relative strength, because some of the other stuff's just been getting undercut, like a coin or docs or whatever. That stuff's getting undercut. But this one didn't really go all the way back down. So maybe this is something that's showing relative strength, like this SG, kind of the same thing. This one actually shook out a low, but it kind of wedged down in. And then like had a massive bar yesterday, came down to retest, and then boom, closing on highs again. So maybe this is one to keep track of. And maybe if you get some sort of tight entry, if you missed it over here. So that's the kind of like thought process is I'll go through like the big movers of each day. If I see something that looks interesting, I'll add it to my watch list. But on the weekend, I usually just, again, go back and go to this US stocks, start with the Amazons. And I also like to look at like a ATR, like average true range. Like, does it know how to move, or is it kind of like a slug? And again, you just go like one by one, just, you know, boom, a couple seconds on each, boom, 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 boom. And a lot of times you'll find nothing. And sometimes it's like where we're at now. Like, why bother even looking for stuff when things are getting hammered? But you should not, even though we think there's no setups, you never know. You just stick with your routine and don't get away from your routine. Just get used to doing it. And because you never know when things will pop up. The market can change in a dime. You just never know when stuff will surface. And so you always want to just have that solid routine and go through and just kind of comb through. I'll just go through. I mean, a lot of this stuff looks pretty bad, but maybe for every 500 charts look bad, maybe there's one that looks good and you want to maybe put it on your watch. Like, well, not anymore, but this was kind of tightening up here, but REGN is now looking like maybe you want to take out the lows. Like bios have been, you want to focus on strong groups too. So the reason I do this, there's probably an easier way to scan through and find stronger groups, but I like to kind of do it old school, find out, is there a theme of all my watch lists? Are they 80% like energy names? Maybe I should be looking at energy names because they're super strong. Because you want ideally the market at your back, and you want the best group at your back, and you want the leading stock in that group, ideally. Every now and then you can get a super strong salmon swimming upstream in like some crap group. Like maybe you'll find a tech stock that's bucking the trend, but the rest of the group is horrible. You want the group and the market behind you. Sure, you can get away with it at times, but that really kind of helps put the wind at your back and kind of helps set you up for a better probability of success. So this is kind of my routine. And in the morning, I really don't look at pre-market movers too much, only if they're on like my watch list for the day. But usually a lot of my work is done at night. And if I get alerts during the day, maybe I'll come here and check them out. And because sometimes I'm used to my phone now. Like TradingView is really good, like I said, but it's nicer on a big screen to kind of comb through stuff. So
yeah, I was going to ask you, you already talked about it a little bit, but if there's anything different you do, given that we are kind of in a corrective market downtrend right now, if there's any like extra screens that you run to try to find those stocks that were bucking the trend.
No, nothing changes for me. I mean, it's really, again, it just all comes down to setups. And I have an idea like indexes where they are, but I'm not even like bothering to look at those right now. I just want to try and find like, are there any stocks that are, emerging? So maybe like the indexes are making lower lows. The way to identify maybe something that's bucking is maybe it hasn't corrected as much is one thing. Maybe it's starting to make higher lows, like where everything else is making lower lows. Maybe this thing's making higher lows and it's not ready to go yet, but you want to pick up on that kind of stuff. But I'm not changing my tactics or my strategy. I know right now is a horrible time for what I do. So I'm not going to try and learn some new setup or whatever. Again, like you don't want to really get off track. Just know, like I said, that your strategy is going to have an off season. Right now, this is an off season for what a lot of us do, and you don't need to force the issue, and just let things come to you. I mean, don't be so proactive to want to force things in there. Just wait for things. They'll speak to you when the market wants to go. You'll know. Like right now, you should be sitting doing nothing. You shouldn't be in a rush to do anything, really. I mean, unless you're a day trader, you're probably doing okay. But for people that are looking for bigger moves, like, this is a time to study. Go back and look at, prior winners, still go through the scans. What's making, sometimes I will say when the news is worst and nobody wants to buy anything, but maybe there's a stock like a Bros today that just busted out of that downtrend line. It's scary as hell. You don't want to do it. All the bad news is out there. Those are sometimes the best time to buy. It's because, like, you just got to do it. You just got to take the plunge, and you don't want to maybe go too big into it, but maybe like a little pilot position. And because, like, if you think back to like when, what's a good example? Back in 2008, things were getting clobbered. I mean, maybe it was like Priceline or one of those stocks. That thing started to break out, but people probably didn't want to touch it because the broader market was getting creamed. But again, those are when the leaders start to emerge, and it's scary as hell to buy, but you just got to take the plunge sometimes. And maybe you don't do it on huge size, but because when everybody's on the same side of the boat, like, I don't know if I have no idea what sentiment's like right now, but whenever everybody thinks we're going to be crashing, you should probably be looking for longs. And, unless you caught a short, miles higher, like shorting, I don't really short that much. I'm not good at shorting. Shorting is a lot harder. Like, if you look at a monthly chart of the market, it just goes up, right? I mean, maybe you have some blips here and there. And I don't really like shorting breakdowns per se, like a breakout, but to the downside, because the biggest market rallies happen during bearish environments. And so you got to be quick. I like shorting. Like, if I short, it'll be like a parabolic short, something goes parabolic, and then you get a gap down, right? Or it meanders around on lighter volume back up. And then those plunges can be super duper, but I don't really short too much. I just kind of like to stay out of it. I mean, if you're shorting the last few months, you've been doing great. But it's not my comfort zone. I know what I'm good at. I know what I'm not that great at. And so I just try and sit away around for the good times to come again, which they eventually will. So keep that powder dry as you can. And don't be in a rush to do anything when the market's kind of volatile like this, because you want things to tighten up. I mean, ideally, on like the Qs, for example, if we can get like a week or two of, I don't know, who knows, maybe we're going to never see this low again for a few more months. Maybe we kind of meander up and maybe do a double bottom, who knows? But if we can get like some sort of tightness here for a week or two, then maybe, even though we're below the channel and maybe we still need more time on a bigger time frame, maybe there'll be some things to do. Maybe there's some strong stocks that will have tight, small pivot points you can buy through. So you just have to be open to anything. Don't get too biased because all of Twitter's predicting the end of the world or whatever. So always keep an open mind and just stick to the routines and don't sway away from it. So just keep doing it every day, even though you think the market's stinks, because you never know, like I said, when it's going to come back.
Perfect. And Ryan, were there any other setups that you wanted to go through or anything you wanted to cover?
Sure. I don't want to take your entire afternoon. So there was a couple others. I love it. So let me try and think. Oh, like gappers. I love gappers. So NTLA was a great example. So there's two things to note here. So this was like a big, huge base, nice vacillation back and forth from Jan all the way through June. And then you get these massive gaps. So people are probably petrified of these things, but gaps are power. I will admit that if you over gap by a ton, this was at like $90 and a gap to like 120 something, that's a big gap. So unless you're doing some sort of like 5-minute opening range breakout or 1-minute opening range breakout, you can try and buy right at the open, but I only like to usually buy right at the open if it's gapping perfectly at like a line. Like if it gapped like to the right pivot, here, this line's kind of crooked, but if you're to gap like a downtrend line and it gapped right there at the spot, I don't have a issue just buying right then and there, like the opening print, have your stop in place if it goes and fails. But like on something like this, you shouldn't steer away from it. But you might not want to buy it right at the open. You might want to have some sort of like intraday setup. So like on this one, it was perfect. So it gapped up the first day, undercut that first 60-minute low down here as an hourly chart. And then it didn't really, sellers didn't get far. They kind of meandered around maybe 5 or 10 points and then right back up. So when you get this dip, rip, and then sideways, that's a sign that the stock's telling you we're getting ready to go. And look how tight this was. I mean, it had nothing, it wanted nothing to do with filling this monster gap. And that is a sign of strength. And so you could have waited for this to tighten up, which it tightened up beautifully. And if you even like draw like a little mini uptrend line here, it's a really small one. It kind of shook that out. It's like a little mini shakeout before the breakout. You hear that a lot, like stocks will shake out before a breakout. This is a really microscopic example of it, but it's so subtle, but it's still the same thing. And then it goes right back up to the line. You could have bought here. Like this is something you could probably hammer if you wanted to, even though it made a huge gap because something changed. There's this massive volume. Like look at this volume. It's like 500K on average, and it goes up to 20 million. There's some sort of massive change. Usually like the best gaps, the best moves will come from things that are like neglected. Like if you go back to like Facebook of 2013, it was just the horrible IPO. It was just meandering around the lows. Then there was that big character change on earnings. I think there was a big surprise. Everybody's caught off guard. Stuff that's surfing the lows and then has like massive gaps. Those can lead to massive moves. UPST kind of had it. It wasn't really at the lows, but made a massive move. But I mean, you could buy out of here. What is that? 130 something. And then it goes all the way up to 200 in like 2 days. And you get a little naked reversal bar up here again. And it's into that round 200 again. So if you took the trade, I mean, don't be greedy. It just went from 140, 130 something all the way up to 200 in like 2 days. You could sell that and then move on to the next or whatever. So I wanted to show like gaps, like people be petrified of them. But if you get a massive earnings gap out of a massive base or something, then those can be great. So embrace big gaps. Gaps are power. Let's see. Let me go to some older ones. I wanted to last time we talked, get into some old IPO examples. But I didn't get around to it. So I wanted to kind of hit those again for like,
let's do it.
Yeah. For certain things that we see. It's like Google, for example. I don't know if you can see this okay, but like when an IPO, you'll see this a lot. Like Google's an exception because usually things will take multiple months. Maybe they have an initial run up and they come back, meander around. Google put in like a perfect IPO turn. So you have that like 3-day run up, then it kind of meanders around, but look how tight it's getting down here. So you can draw like a little descending trend line and then it just gets a little tight, and then it pops above it, but it doesn't really go far. It maybe puts an inside day the next day. So you can kind of count this as like a mini, like 1, 2, 3 over here. So these, you'll see these like little turn pivots in IPOs a lot. So you could have bought, I mean, I wasn't trading around 2004, but you could have bought out of here and then it just rips up in this channel. What is that? From like 45, 50 bucks goes to like 70. And this must've been earnings. And then like, as we said, you gap these rising channels. This is a kind of steep rising channel. Whenever you gap over them, it's usually exhaustion. Sometimes, it'll make you look like a fool for selling and then it'll just keep going parabolic and whatever that happens. But more times than not, if you're to buy when something's extended over these channels, it'll usually take time to kind of vacillate around or a breakdown or whatever. But then also put in like a little rising channel here. These slight little rising channels. It's kind of like that QQQ one that we showed earlier in Jan Feb timeframe. They'll usually like break down. So then it just bases around. You could have tried a breakout here. I probably would have bought this and then you would have gotten stopped out. So it needs some more time to base out. And then this is like a perfect example. Like this is like a kind of like a first mouse attempt. First mouse usually gets his head chopped off, right? And then this is earnings. Here's the second mouse. Again, it gapped up to new highs. So anybody that was short this thing, all the shorts are underwater. It closed on low. So this is normal. So whenever you get a earnings gap, it's very, very common for stocks to close near the low of the day. It doesn't mean they're going to fail, but it's just Apple did it a couple of times, I think, during its big move. It's just very common to see that. But you'll notice the next day it's just right back up and it wanted nothing to do with filling that gap again. So that, again, similar to that NTLA example we just went over, this is power. It doesn't want to fill it at all. And I mean, you can ask like Dan, he made like 20 million bucks on this one. He was going around on this earnings move excuse me, he couldn't get enough money. He was like hitting up banks, asking to like lend him money so he could dump it into like Google. And I mean, this is like a brand new company. There's a lot of hate around this. I don't know if there was hate, but people were questioning the valuation, even though the growth rate was through the roof. There's a lot of negative sentiment around it. And it's just posting incredible earnings. It's a brand new merchandise. And this was like a perfect storm. So, I mean, you could have been like feeding into this thing and use like the gap as your stop or something. And then it just works up. And then you're getting a little stretched over the channel. Again, it's good to reduce. I like reducing into strength when you get these little channel rips, just because it helps with the equity curve. And it kind of helps with your emotions too. Because if you don't reduce on the way up, and you still got a full position, you tend to be a little more emotional. And whereas if you dump like a 30-year position or whatever the percentage is that makes you sleep at night, then you can rest assured like, oh, at least I lock something in, and I can sit through the pullbacks a little easier. So anyway, like down here, this is the kind of stuff you want, like nice, tight. You want things nice and tight at these like descending trend lines. They make for really tight entry points. And this was a good example of that. And then, as a good one was eBay. That was a killer looking one. Similar type of thing, but you have like a little descending channel here. It breaks above. It doesn't get too far, but it's a similar type of thing. And just here's like the 1, and then the 2 just meanders around sideways. And then the 3 is where you would buy the 1, 2, 3 setup. And so that's really essentially what a 1, 2, 3 is like, hey, is the selling subsiding? And are we getting ready to change direction? Basically, they don't always work, but on the flip side, the same works for the downside. We saw that with the QQQ channel break, right? It kind of dipped below, went back in, but then it finally gave way. And so these things you always have to be on the lookout for. So this was just like a clinic in like buy points. So you could have bought here, goes up for a couple of days, and then it kind of puts in this nice little, I wouldn't call it flag, but like this nice tight action. There's not much give. Here's like a little gap here, but it doesn't really fill it that much. And then you could have bought out of here, bam, 1, 2 punch, and then it tightens up again. You could have bought out of here again. This thing's just like feeding you buy points. And if you were to buy multiple times, you could just do all at once down here and then just sit. But if you're buying multiple different times, like this would be a good example of pyramiding. Maybe you wanted to get a little bit into it. You're not quite comfortable putting your whole position in. And so maybe you do like a third, you could do like a third here, but then we need to wait for some sort of other setup. You don't really want to be adding per se on like a random update like this, because maybe then it goes back down. The next ad should be some sort of like tight consolidation. So you could have pyramided into this, but each buy you have should have its own stop. So if you're buying here as like a second buy point, you shouldn't put the stop, have the same stop as like down here, right? Each one would have its own stop location. And so you could have bought here, tightens up, buy here, bam, kind of has like these like extreme bars. I call it like 2 or 3 extreme. If you get like 2 or 3 extreme bars in a row, like I like to reduce into those, just knowing that you might need some rest. And it's kind of a little wider and looser up here. And you can kind of draw your little descending trend line and look how tight it got right here. This is incredibly tight. This is the kind of stuff you want to be looking for right here. You get tightness right at the end of the trend line. Sellers are subsiding. They can't get very far. And then boom, it gapped above it. It was kind of an over gap, but it's not, the distance isn't that far. So it's ideally you want it pretty close to the line. But if you get a slight over gap, maybe you can wait for a 5-minute open range breakout or whatever. If you're not comfortable just buying it right at the open. But again, it ran right up. But if you start drawing your trend lines, it stopped right at the line. And then it's getting wider and looser here. It kind of shook out this low, ripped all the way back up, got smacked back down. But then the same thing happened again. It's like, look how tight this is. This is kind of like what Tesla looked like at the start of 2020 after it got crushed, right? There's like that little slight turn pivot, if you will, and then it blasted through that. And it didn't really rest much. Like I probably wouldn't have bought this here because you want to see things like tighten up ideally if you're at a standard breakout point, but it just blew through this thing. And then again, ran to that line, bam. So this is why I like selling into these upper trend lines like O'Neill talks about. And that's like one of my sell rules. Otherwise, like for selling into strength, maybe there's not one of these around and you just have to like eyeball, like look at a stock's history and say, oh, this stock, like Lucid, if you go back and look at Lucid, like it likes to make like 2 days in a row, but that's it. It's like boom, boom, 2-day move. And then it goes sideways for like 5 days. And then it goes boom, boom. And then it'll go sideways. It doesn't like to do 3 in a row, right? So you have like each of these stocks, like we said prior, has its own way of moving. They have their own temperament and whatnot. But then it got wide and loose up here and then went all the way back up here again, like that same little line, and bam, and then it got wide and loose. But that was another good example. Let's see, TLRY, similar thing. This one was a little trickier. You kind of have the same thing like Google, boom, and then you had like a little descending trend line and went over it. Kind of stalled here. I don't know what price that is. Call it like 25. And then I remember I bought this back here because it kind of broke out, closed a little weak, but then I stopped out because it just kind of completely like failed the turn. But then the next day, it screwed all these sellers here, gapped right back at the line. So I rebought, and unfortunately I sold it prematurely. But this is why, if you catch something like this and you have a cushion, it's good to just sit. And then for sell rules, if you wanted to just say, hey, I'm only going to sell it if it breaks the 10-day, like this thing never broke the 10-day. Like it just rode this thing all the way up to 100 plus or 300 or whatever it was. That was the parabolic move. But I mean, if you just sit, I get antsy a lot. Like that's another issue of mine, is I'll get antsy. Like something, I'll make a big move. Like I think, where did I sell? Like I sold most of mine around like 50 and thinking that like it'd gone too far. And then it didn't even violate anything. It didn't even break the 10-day, right? It just kept going, like higher lows. And so sometimes the hard thing to do is the right thing to do. You want to so much that you just want to sell it because you're up, but sitting really is, sometimes sitting is what's required. And it's hard because you kind of have that nerve, like, I don't want to give too much back. But if you feel like that, maybe you have too much size. And so maybe you need to reduce, get down to the, whatever they call it, the sleep level or whatnot. Point. Yeah. But so that was another example. Like these little terms, like this stuff repeats. And so you guys got to be, aware of this thing. They don't come all the time, but SAIL, similar. So you had the initial IPO basing action here, tried to pop out past this initial high, didn't get far. A lot of times you'll see that with stocks, is they'll break out and then they'll pull all the way back. And so you get people off the trail. Like the good ones will just kind of maybe stop here and retest and then keep going. But a lot of times you'll see that they'll just overshoot and just break down. And then they'll gather themselves after everybody's sold out and gone. And then these second mouse type breakouts, look how tight this got here, and bam, it made a nice big move, put in this nice bullish channel. And then it got super tight again. Again, you want these nice tight, when you have descending channels, they're better when they get nice and tight, either under them or just over them. And then it made a nice quick little week long move. And then it got really choppy in here. But again, here's another confirmation of my point. You draw these little upper trend lines, like O'Neill says, and boom, ran to that one, doink, doink, doink. So again, I like to reduce these things. They'll make you look like a fool sometimes by selling. Like I did that with Futu and early last year, and went to like 100 something without me. I sold it like $60, but anyhow, GoPro is another one back in the day. We've got like a nice up move here. You get all this wick here around, what price is that? Like 44, wick. All these sellers are coming in at 44. And then bam, you could have bought here. Then you would have gotten stopped out the next day on this gap down. That's not ideal, but look what happened. So there's 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row where this thing closed on the lows.
Right.
And so you even had right here, like this little, if you were to draw this little line, it shook the support and then gapped right back above it, but it still closed weak, but it's still kind of holding this higher low area here compared to here. And then this was a total character change. Like after day 9, this thing closed on the highs. Like this is something that I wouldn't have a problem somebody like feeding into a stock like this, because it's a character change. It didn't close 10 days in a row. Now it's closing near the highs, and you can kind of see it start to gather itself again. So that initial pilot buy would have worked its way all the way back up to this standard trend line break, broke above it. And look at these people that are into volume profile, put right at this point of control right here. These can be key. That's another thing I usually look at. I don't have them in a lot of the charts I do on TC2000, because TC2000's chart with the volume profile is not the best, but
yeah,
I like TradingView has a pretty good view of it. I think TrendSpider is pretty good with the volume profile too, but you'll notice like these are pretty big areas of interest too. So people that aren't familiar, like these point of controls are it's the price where there's the most shares traded. And so they're usually looked at by, bulk of the players. And so this ripped up huge. This right here is a good example of this bar. of like, how well do you follow your plan? Because you've got like 4 nice up days after the breakout, and then you get a gap down and then close kind of near the low end of the range. So this is like a naked, pretend there's nothing over here. This is like a naked reversal bar. And so when in my early days, this is where I would have like panic sold. And instead of just holding, there's nothing broken at all. But like a lot of times when a lot of my early failures were just selling on stuff like this, like they try and fake you out and see how strong of a conviction you have. And then look what happened the next day. Is what I mean. Like you get a nasty reversal bar, but had you sold, a small little gap up and then just new closing highs again. So that's why you need to take the emotions out of it. And again, that's kind of why I have all my bars set the same color, is I don't want to see bullish. I don't want to see bearish. I just want to see price. Like I want to see the structure of price. I don't want any sort of emotions getting into my head. So anyway, this kind of resumed all the way back up, but I mean, if you can't take like base measured moves, like this is went from like roughly like 30 at the base low to 50. So there's like $20 difference. So, you know, if you add to 20 to that extra, the base high of 50, that gets to 70. So 70 could be an area of interest where sellers may step in as like a completed measured move. And then, so it got to that level, and here's one day of wick, another day. So like 3 out of these 5 days here, you're getting some sellers. And so finally kind of caved in, but the 10, I didn't drop, but the 10 days right here, kind of double bottomed at the 10 day and then just resumed on back up. And then here's like another measured move. So at the breakout spot, it's not really a classic flag, but you can kind of consider this little consolidation as like a flag. So here's the pull, the flag, then the move. That was like another measured move, but right into this round 100 mark again. Level. It's like a double top. It overshoots, you know, it stalls, comes back. This is wide action. And then it overshoots. And then I'm telling you, all these round levels, they just are really big resistance areas at times. But when they get through them, they could really move fast. Like I think it was Livermore that said, like once you clear a century mark, for the first time, it can make a really fast move to like 120, 130 area. But this one just kind of stopped and then yuck. But again, these are kind of things, and the best IPOs will come out in crappy markets. Like we had a lot of SPACs and, you know, companies going public in 2020 when everything's rosy, kind of masks a lot of the shortcomings of the company maybe. But, you know, the best, you know, I think you hear people talk about the best IPOs come out in dog shit markets. And so you always want to be on the lookout. I don't know if there's any really IPOs out there right now that are like this, or maybe a few. So you always kind of want to pay attention to these newer issues because, you know, it goes back to the point of there's always innovation in this company, in this world. And there's always people, you know, coming up with new ideas to improve how we do things. And they're going to want money, like, you know, Jim says, and they're going to want to go public, and there's going to be opportunities. So even though you've never heard of a stock, or, I mean, everybody's heard of GoPro, but you're not familiar with the stock, maybe you don't have conviction in it, but the pattern's really amazing. You know, don't shy away from those things, because the most under the radar stocks are usually the best movers. Like if you see like everybody and their mother's trading like Ford on Twitter, it's not a good sign. Like you want something that no one's looking at really, because it's just kind of like that reverse psychology, under the radar type of stuff I like looking at. And anyway, but like MYNZ recently, it's kind of pulled back since then. But like initially when everything was getting smoked, this thing was like doubled in a few days, and yet nobody was like talking about it. And it's like under the radar names can make big moves. So you don't always want to get stuck fishing in the same pond with like big leaders from the prior years. You want to expand and go fish in the ocean, right? You don't want to fish in some like rinky dink pond. There's a lot of fish in the ocean, and there's more to it than just, you know, the names that we're familiar with. So it's always good to branch out. But anyway, that's kind of like some examples of things I look for in the IPO front. And yeah, last year I would say, you know, most of the money from people were probably made in Q1. The bulk of my gains were made in Q1, and you know, Q2 was good, and then, you know, butchered Q3 and then a little bit in Q4 again. So you got to know what kind of environment you're in and adapt, and you don't want to be hitting pedal to the metal when you're in choppy environments. You want to be doing less. You don't want to be doing more. People want to get losses back quickly or whatnot, and they keep adding exposure, trying to get it back, but in reality, they're digging themselves a bigger hole. So when we're in this environment, it's usually good to just stay calm and do less and keep an eye on things, but don't get too crazy.
100%. And yeah, I love going through the IPO base templates because, for instance, last year, I think one of my better trades was in Bros. I got a nice trade up the right hand side of the IPO base. And there's often good opportunities that come out every single year using that setup. So yeah, love going through that. And Ryan, I want to thank you so much for your time. And I always like to finish it off with kind of one last question. What kind of general advice would you have for new traders out there? Right now, we are going through a corrective phase. So what should people do to stay optimistic and be ready once the uptrend resumes?
So one thing I do is I go back to the good times in my head. Like when we're in bad times, the feeling you get when you have like a nice big move and your account's moving, don't let go of that feeling. Remember it in the back of your head because those times are coming again. But you have to wait. You have to be willing to wait and you have to keep that mental capital intact. And most people want to do things every day. Like I mentioned, I struggle with, doing nothing. It's something I'm working on, but never forget what that feels like when you go through a good period, because it's going to come again. You just have to sit and wait. Things don't go to the moon every single day, every single week. There's a process here. After big moves, there's ebbs and flows, and however long it takes, it takes. If it takes weeks, if it takes months, if it takes years, you have to be willing to sit, but don't ditch your process because you're in a rut. As much as it sucks, if you're losing money, and maybe take a step back, but you have to fight through that negativity that's going on in your head and just keep at it, keep the routine the same, keep going through it because you have no idea when the market may turn and your frown will get turned upside down pretty quickly. So I think that's one thing is always remember what it feels like during the good times when you're getting discouraged, because you don't want to lose sight of that and beat yourself up too much. And again, I've said it a million times, but I think the thing that helped me the most is if you're passionate about something, stick with it. Don't ever give up. There were times where I was getting obliterated, like trading options, like emotionally you're a wreck. Like even around like my wedding, like back in 2013, like 2013 was an amazing year, 2012, 2013. Like I was getting like smoked trying to buy like price line calls and, and these just wild stuff. And it was like the best weekend of my life at my wedding. And I think it was a good perspective for me to say, hey, there's more, out there than like feeling sorry for yourself and getting stuck in a rut. Like there's more to life than trading, even if you love it. I love this more than anything, not my family and friends, but aside from that, I love this more than anything. But at the same time, you need to have some perspective and not let it kind of ruin your emotional psyche. Take some time to get away from it and do other things. And I think that balance, you get out what you put in. You need to, the people that do really well go at it more than others maybe, but you still have to find a balance. Right. So I just say, don't ever give up. I went through a million rough patches, trying to get to the spot where I'm at now. And it's taken a long time. And you just stick with the process and believe in it. If you don't believe in it, then forget about it, because then you're not going to get over the hump. But if you believe in it, then by all means stick to it, because it's going to happen. And you're going to come across some sort of light bulb moment where something's going to click, and then you're going to start to slowly gain traction. And then something else is going to come in and you're going to gain even more traction. There's going to be a little bumps along the way, but just make sure you're taking 2 steps forward and 1 step back and not the other way around. And just always believe in yourself. Don't let anybody try and throw you off, ditch the haters. You'll hear people try and tell you that, oh, nobody can successfully beat the markets like over time. It's like, yeah, even if you had like a bad year, let's say, but like the prior 5 years, like we're winners. It's like, who cares? It's like one bad year out of like a span of 50. You want to be doing this until you're 6 feet underground, most people, right? And so just kind of try and think and don't get too caught up in the short term. Think longer term. I think that kind of helps with my perspective as well. So just keep grinding. Don't ever give up. And anybody can do this. Like I said, if you have 2 brain cells, you can do it. It's simple. I always joke, like people always ask, like, they're like, what do you usually do? I was like, do you know like Crayola Crayon Box? Like, yeah. I was like, you went to kindergarten class, right? And they're like, yeah. I was like, I just get out my crayon box and just draw some lines on the chart. And that's like, I mean, there's more to it than that, but you try to boil it down into your simplistic, the most simplistic form possible. I think that, again, that helps me, as I don't want to complicate anything. Like, I don't want to be looking at economic indicators. I give two shits about that. Like, all I care about is, are there setups or not? And if there are, narrow it down to the best ones. Maybe there's a company that has exceptional sales growth and you want to focus on those. And so there's all these little tidbits you can kind of put together, but don't let people throw you off the beaten path. Always stick with it if you believe in something. And okay, I'll stop rambling, Richard, but you get my point.
Oh, perfect. Ryan, this was fantastic. I really enjoyed it. So if you did as well, if you're watching this, go ahead and leave a like down below and subscribe if you want to see more videos just like this one. Ryan, I want to thank you again. And since you're now on Twitter, you've come over to the dark side. I'll link that down below in the description. But is that the best place for people to reach out to you if they've got questions and want to learn more about your style?
Yeah, Emperor Palpatine got to me this year, so he was like, good. I'm kidding. I mean, Twitter used in the right context can be great. Like, I want to pay for it. I remember how it felt coming out as a struggling trader, and it's a miserable feeling. And I was so fortunate to find, Dan and Randy, who kind of took my trading to the next level. And you still have to do the deep dive and do the work. But I mean, I was forever grateful to them for, helping me along the way. And I, if I could help one person even turn the corner, I think that for me is, would be huge. And you hear a lot of people that are successful in life. They spend their whole entire dying years of, trying to get to a certain point. They want money, or they want a certain job title. Mm-hmm. And then once they have it, they realize that's not everything. It's like, there's more to it. And I think a lot of people would say, it's like, hey, giving back. How do you give back? And what's your, stamp on this earth? And what do you want to be remembered for? And were you a helping person, or were you a selfish, greedy prick? So I love helping people. I want everybody to do well. I love seeing that. I'm not like really a hater. I enjoy when people do well. It brings me joy. So if I can help in any way, get to even have somebody pick up one little tidbit of information that helps them, that'd be awesome. So there's a good spot. And so hopefully everybody has a great year, and maybe a little more challenging, but you never know. Like, from the good times come bad and come the good again, right? So just be patient and stick with it.
Perfect. I think we'll end it there. And if you haven't yet watched our first interview together, I think that was also fantastic. That'll be linked down below in the description as well, and popping up on the screen. But with that, I think we'll call it there. And thanks so much for watching. I'll see you guys in future videos. Thanks.